Hey there, let's have a real talk about what's brewing in the world of Bitcoin. Are you feeling optimistic about the shape your application's in? How about the possibility of it getting the green light by January 10th? We're all hoping for that breakthrough, right? But let's face it, the regulatory landscape around compliance, especially in this field, has become a complex and integral part of the business model. We've been keeping a keen eye on the potential for a significant price crash looming over Bitcoin. It's a concern that's been growing, and it's something we can't simply brush aside. When Bitcoin takes a dive, it can really plummet in ways that stock markets seldom experience. So, let's delve into this concern together. If the approval for Bitcoin's ETF doesn't materialize, we'll just illustrate how far the price might drop and where we personally would consider entering the market. This video isn't just for enthusiasts. It's for anyone who has a stake in Bitcoin. There's a critical factor here that seems to have slipped the radar amidst the overwhelming positive signs. We are hearing discussions behind closed doors between SEC officials, with hints that the approval might be around the corner. But there's an element of uncertainty with Gary Gensler in the mix. His stance on crypto has been far from favorable, citing issues like non-compliance and potential misconduct in the field. He's the boss in this scenario, and his decision could be a game changer. Let's contextualize where Bitcoin stands right now. It's been on a pumping spree for over a year, and we've been publicly bullish on Bitcoin throughout this period. In fact, we've reiterated our optimism in multiple videos. If you've been following along, you're probably nodding in agreement, realizing that few others have been as publicly optimistic as we have been on this channel. So, buckle up, subscribe if you haven't already, and let's navigate this complex and ever-evolving Bitcoin landscape together. There is a lot at stake, and it's crucial to stay informed, especially in times of potential upheaval. It's not just about being a Bitcoin enthusiast. It's about making informed decisions that could impact your financial journey. Stick around, folks. We've got a lot more to discuss, and we're here to guide you through it all. Now, let's talk about a major concern that's been on our minds lately. A concern that we believe is becoming more prevalent in the current crypto landscape. Have you noticed how everyone seems to be incredibly bullish about Bitcoin? I mean, take a listen to Kate Rooney on CNBC. She beautifully articulates every single catalyst for Bitcoin's potential in 2024. Now here's the million-dollar question. If the media, like Kate, is already highlighting all these factors, is this enthusiastic wave already priced into Bitcoin's surge? Let's dive deeper. There are two significant events fueling Bitcoin's newfound momentum. Firstly, there's this anticipation surrounding the ETF approval, and secondly, the upcoming halving scheduled for April. This excitement has already driven Bitcoin's price up by around 65% in the past 3 months, especially riding on the hopes of the ETF approval. The ETF buzz is all about the SEC's looming January 10th deadline, particularly focusing on the ARK21 shares ETF proposed by none other than Cathie Wood. There's chatter that the SEC might soon notify issuers about their approval to launch these ETFs. If greenlit, this would mean a publicly tradable fund mirroring Bitcoin's price, potentially easing access for investors, attracting a wider audience, and possibly stimulating more institutional interest. Now, onto the halving event in April. This is a critical piece to understand. Bitcoin's new issuance gets halved, a mechanism designed to limit its supply. With a code dictating that only 21 million coins will ever be in circulation, this move makes mining less lucrative and intensifies competition among miners. Bitcoin's surge is also being buoyed by factors like lower interest rates, the resurgence of risk appetite among retail investors, and a return to favor of small-cap tech stocks. Now, we want to make it crystal clear. We are long-term bullish on Bitcoin. We firmly believe in its potential, considering various factors such as institutional involvement, market dynamics, geopolitical events, and much more. We foresee Bitcoin hitting the $100,000 mark within the next couple of years due to a myriad of reasons. However, here's the twist. We're contemplating selling and potentially buying back at a lower point in about 2 weeks or maybe even a month. Why would we consider such a move, you ask? Well, it's got something to do with what we call the Jim Cramer Bitcoin Reverse Indicator. Now, Jim Cramer, known for his stock market predictions, has an uncanny knack for getting crypto forecasts wrong, like 95% wrong. It's astonishing how often his calls have missed the mark. His track record during the 2021 bull market and beyond shows a pattern of consistently off-target predictions. Remember his life-changing trade advice when the prices were low? Yeah, that didn't pan out as expected either. So, this indicator, when Kramer says sell, the price tends to surge, and when he suggests buying, the price typically takes a dive. It's a pattern that's hard to ignore and makes us think twice about the current market scenario. These are fascinating times in the crypto space, and navigating them requires a careful balance of analysis and intuition. So, while it's nice to remain optimistic about Bitcoin's future, it's essential to acknowledge these potential markers in the current market narrative. We've got Jim Cramer, who was once skeptical and doubtful of crypto, and now we've got Jim Cramer back on his bullish horse again, saying crypto's real and here to stay. He even said that the late Charlie Munger, for all his brilliance, didn't see this coming either. You've got to admit, it's a technological marvel. Even the SEC, with all their past resistance, seems to be softening their stance. Now let's talk about the elephant in the room, the potential crash. Jim Cramer's enthusiasm is like a red flag to me. It's a call for caution. So, if Bitcoin were to nosedive in the short term, how low could it really go? Well, here's my take. $32,000 seems like a plausible floor. That previous resistance could become solid support. Picture this. Bitcoin rallies to around $60,000, then does a nosedive back to $32,000, maybe around February. It's that whole approval rally followed by a reality check. But hey, we've got to consider all the possibilities, right? Maybe we're all being a tad too pessimistic. We're still nursing those burns from the last cycle. There's a chance we might experience a surprise, just like 2019. Remember when everyone thought $6,000 was a huge barrier? Bitcoin brushed past it and never looked back, except for that one unforeseen event. So, who knows? Bitcoin might just break its own records leading up to the halving. Here's the kicker. This time might not be like the others. That Jim Cramer effect? It might not hold true this time around. There's a chance that we're looking at even higher highs, and we're ready for all of these scenarios here. Subscribe to our channel. We're here daily providing insights that mainstream media won't touch. The year's shaping up to be quite alright, and we're all in for it. And of course, thank you Cryptonauts. We're here to give you an edge in the crypto market. Trust me, there's so much potential in crypto this year. Let's make it count.